Here's the thing. I actually created this little illustration. This might get a little bit tedious, but I want to walk through this so everybody can understand, because the big question is, well, how much should I withhold?
Right.
I'm in the 22% tax bracket. Should I withhold 22% federal? Well, probably not, because of the graduated tax bracket. So here's what happens. This may be a little bit of a as I said, a little bit tedious, but let's talk about a federal income tax return. We have this graduated tax system in America where you have a standard deduction. And in the case of when you are 65, you're going to have an above 65 additional deduction to the standard deduction. Now, the standard deduction is one level if you're single, another level, a higher level, twice the level if you're married and filing jointly. Now, after the standard deduction, you pay this tiered percentage of tax based on how much taxable income that you have. For example, you would pay 10% tax on the first $20,550 of income as a couple married and filing jointly. The next $63,000 of income would be subject to a 12% tax, so 2 percentage points more on all of that income above $20,550. Let's use an example of a 65-year-old couple making $83,000 of income. Our calculations are based on some software that we have from KJE Computer Solutions. The amount of income subject to tax is not $83,000. It's $55,000 and some change, $55,700 to be exact, due to the standard deduction and the age 65 deduction. The tax owed to the IRS on that $55,700 would be about $6,276, which is a 7.5% income tax effective tax rate, meaning 7.5% of that taxable income is being paid to the IRS. That's barely a fraction of that 50%, Scott, that people talk about that you owe the IRS out of your IRA. And by the way, if that couple has half of their income coming from Social Security, it actually drops the tax liability to $4,146. This happens because only a portion of your tax liability, only a portion of your Social Security is subject to some tax liability. Now, that is just an example, and it's a very narrow example. Every tax situation is different, but here's our point about this. You should not be scared out of doing the right thing as far as, your finances are concerned, to try to avoid some, booger bear that's out there, so to speak, about taxes, because I think it's very easy to prey on people who don't have any way of earning additional income. They've got to make this nest egg that they have last throughout their lifetime. And when you tell somebody that they're going to pay 50% of that to the government, it raises the hair on the back of their neck.
Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.